Is AMD a buy or a sell? Let's get started with the model. This is a large cap company, 224 billion market cap. They're trading at 138 a share, and they have 1.6 billion shares outstanding. AMD is a fabless semiconductor company incorporated in 1969, headquartered in Santa Clara, California. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Free cash flow is pretty steady from 21 to 22, a little over 3 billion, dropped 64% into 2023, 1.1 billion, up 39% to 1.6 billion in the trailing 12 months. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that surprisingly drops from 21 to 22 and 22 to 23, but it does more than double in the trailing 12 months to 1.8 billion. Revenue is the sales for the company, and that does grow each year from 16 billion to 24 billion. Not amazing growth, but it's moving up. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 240 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $204 billion. We divide that by 1.6 billion shares. And we get a calculated stock price of 126. They're trading at 138, so they're trading at a 10% premium. It's a sell according to the model. Do you think it's a buy or sell? Let me know in the comments. There are 64 companies in the same industry as AMD, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend $567 million in CapEx. They're fabless, so they don't spend nearly as much as Taiwan and Intel. Similar to Broadcom and Nvidia, they outsource their manufacturing mainly to Taiwan Semi. They don't have any debt. They don't pay a dividend. Free cash flow is pretty small, 1.6 billion. They rank 4th in market cap, $250 million. All their price multiples are worse than the median. They're trading at 4 times book value, 122 times earnings, 144 times free cash flow, and 9 times revenue. It seems really overvalued according to these multiples. They generate 24 billion of revenue, much higher than the median average, and they're still growing. Their 5-year annual revenue growth rate is 32%. Their 52-week low is 117, high 211. They're pretty close to their 52-week low, so it could be a good time to pick up the stock. If you put $10,000 into this company 10 years ago, you'd have almost $500,000 today. That's a 48% annual return. To summarize, I have them trading at a 10% premium, ranking 7 out of 10. Seems like a pretty solid company. Would I buy it short term? It's pretty close to its 52-week low, so I would, 8 out of 10. Long term, 9 out of 10. Ratios look terrible, 2 out of 10. But they should grow into their numbers. Financials are good, 6 out of 10. The only reason it's not higher is because their free cash flow seems to be coming down. Let's look at their most recent 10Q. Here's their income statement. Revenue 6.8 billion. This is for the 3 months ending 9/28. And the prior year, 5.8 billion. Of the 6.8 billion of revenue, almost exactly half is data centers. Semiconductor chips that go into data centers, 3.5 billion. Client computing, 1.9 billion. Gaming, 460 million. Embedded, 927 million. Gaming is down a lot. Embedded is also down. Client up a little bit. Data center more than doubled. Here's a couple of big acquisitions. Silo AI, that's a Finnish company. They're paying 665 million. A pending acquisition for ZT Systems. That's another AI company. And that acquisition is for 4.9 billion. Below revenue is cost of revenue. These are all the expenses directly tied to generating the revenue, 3.2 billion. So their gross profit, 3.4 billion, almost exactly 50%. R&D, 1.6 billion. Marketing, 700 million. And amortization, 350 million. So operating income, 720 million. More than tripled from last year, 224 million. They spent 23 million of interest on their debt. Pre-tax income, 737 million, taxes 27 million, so net income 770 million. That more than doubled from last year. EPS 48 cents, and it looks like they're adding shares. Last year they had 1.616 million shares outstanding. Now they have 1.62 million shares outstanding. Let's look at the balance sheet. Current assets 19 billion, current liabilities 7.5 billion. So their current ratio is above a 2. Their total assets, 70 billion. Their biggest asset is Goodwill, 24 billion. Let's get a breakdown of the Goodwill. $3.4 billion of the goodwill is acquisitions from data centers, $126 million client, gaming $238 million, embedded is most of it, $21 billion. They have $20 billion of non-goodwill intangibles. Let's see what that is. $11 billion is developed technology, $7.5 billion customer relationships. Let's look at their liabilities, $2.5 billion of accounts payable. This is how much money they owe when they buy on credit. $4.1 billion of accrued liabilities. Let's see if they give a breakdown. Here's a breakdown of the accrued liabilities. $1.4 billion customer related liabilities, $1 billion marketing programs, $1 billion payroll. Other is $660 million. Assets minus liabilities equals equity, $57 billion of equity. They raised $61 billion from selling their business. They bought back $5 billion of their own stock, and they profited $1.9 billion from running their business. Let's look at a statement of cash flows, the trailing 9 months. Operating cash flow, $1.7 billion. The way you calculate operating cash flow, you start with your net income, $1.2 billion. You add back the non-cash items on the income statement. Depreciation, $2.3 billion. Stock-based compensation, $1.1 billion. And then you adjust for changes in working capital. They spent $1.1 billion on inventory. That's a cash outflow. In their investing section, they had a cash inflow of $100 million. They spent $428 million on PP&E, $548 million on acquisitions. The entire $548 million is on Silo AI. Silo AI is Europe's largest AI lab. They successfully implemented 200 AI products. They have 300 plus AI experts on staff and 125 AI scientists with PhDs. In their financing section, they had a cash outflow of $1.9 billion. They paid back $750 million of debt. They bought back $600 million of common stock. Last year, $750 million. And they paid $686 million on taxes for employee stock rewards. Let's look at simply Wall Street. Its last price, 138, 220 billion market cap, up 2% in the past week, up only 13% in the past year. It IPO'd in 1990 at 369, stock split adjusted. And it was below $2 in 2015. It was close to $50 in 2000. So it struggled for a long time. By the end of 2021, it ran up to 150, then fell to below 60 in 2022. Its all-time high was 211 in March 2024, but it's down about 40% since that peak. Simply Wall Street's valuation is 213. They say the stock is 35% undervalued. 44 analysts priced this stock at 185. They say it's 34% undervalued. Their revenue in 2013 was a little over $5 billion. It was pretty flat for a few years. Then it blew up in 2022, hitting $24 billion. It's currently a little over $24 billion in the trailing 12 months. They had $2 billion of debt in 2013. It came down to $300 million in 2021, but they added some debt from those acquisitions. Its peak was $2.8 billion in 2022. Now it's $1.7 billion. And their equity is always a lot higher than their debt, so it looks really solid, the balance sheet. And they do have more cash than debt, so they could pay off all the debt if they wanted to. The CEO's salary in 2017 was $900,000. Now it's $1.2 million. Total compensation $30 million. 10-year CEO, 10 years. No insider buys in the past 12 months, a few sells. 70% of the company is owned by institutions and 30% by the general public. Vanguard is the biggest shareholder, then BlackRock, State Street, Fidelity, Fisher Asset, Amundi, JP Morgan, Eaton Vance, Janus. Their employee count went from 10,000 to 26,000. And the ticker trades on the Nasdaq, Deutsche Börse, Zitra, Mexican Bolsa, Borsa Italiana, Swiss, London Stock Exchange, Wiener Börse, Bulgaria, Kazakhstan, BATS Europe, Lima Bolsa, Santiago, Buenos Aires, the NEO, and the Stock Exchange of Thailand. So if you want to learn how to build a DCF model, become a pro at valuing companies, watch the video in the top right corner. I may even send you a free copy.